Every 11 seconds, a business is attacked. Your data is likely already exposed, caught in a silent war you never signed up for. This isn't just a corporate problem. It's a direct threat to your financial security and privacy. The system designed to protect you from this digital chaos, cyber insurance, is collapsing. Premiums are skyrocketing, coverage is shrinking, and the fine print hides a terrifying truth. You're probably not covered when it truly matters. This channel unmasks the hidden financial fault lines that threaten your future. Today, we expose how the cyber insurance market is failing, leaving businesses and your most sensitive information dangerously vulnerable. For years, companies bought policies, believing they were safe. They paid their premiums, trusting in a shield against the inevitable digital onslaught. But the shield has shattered and the fragments are cutting deep. The promise was simple: protection from the digital unknown. But the reality is a complex web of exclusions, rising costs, and a market that can no longer keep pace with the evolving threats. This isn't speculation, this is documented. Let me show you exactly how this works. The very policies meant to secure your future are now leaving you exposed, creating a new era of uninsured liabilities that could ripple through the entire economy. The roots of this crisis trace back to the early 2000s, when cyber threats were simpler, mostly viruses and basic hacking attempts. Insurance companies saw an opportunity, a new market to conquer, promising peace of mind. Early policies were broad, covering almost any digital mishap. Companies felt secure, investing less in robust internal defenses, relying instead on their insurance. This created a dangerous dependency, a ticking time bomb. But as technology advanced, so did the attackers. From individual hackers to sophisticated state-sponsored groups, the landscape transformed. The simple viruses of yesterday became the complex ransomware attacks of today. The cost of these attacks exploded. Data breaches went from thousands to millions of records, each carrying a heavy price tag. Insurance companies, caught off guard, started bleeding money, facing claims they never anticipated. This escalating threat forced insurers to adapt, but not in a way that benefited policyholders. They began to rewrite the rules, adding layers of complexity and introducing subtle yet devastating exclusions. The market shifted from broad coverage to highly specific, often inadequate protection. This created a false sense of security for many businesses, believing they were covered when in fact they were not. It's a pattern. I've linked the source in the description. PwC's Global Economic Crime and Fraud Survey highlights the dramatic increase in cyber incidents, showing a 15% rise in just 2 years. The numbers don't lie. The threat is real and growing. The shift was quiet, almost invisible to the average business owner. Policy language became denser, filled with legal jargon designed to protect the insurer, not the insured. This is the mechanism at play. For years, the industry operated on the assumption that cyber incidents were rare, isolated events. They priced policies accordingly, underestimating the systemic risk. This fundamental miscalculation was their downfall. But here's the catch. The attackers didn't care about the fine print. They continued to innovate, finding new vulnerabilities, exploiting the very gaps created by the shrinking coverage. The game changed, but the policies didn't. The pattern is always there. In the early 2010s, major data breaches like Target and Equifax exposed millions of records. The insurance industry paid out billions, but quickly learned to shift the burden. They started categorizing attacks, distinguishing between acts of war and cyber terrorism, often excluding the former. This created a loophole, a legal gray area that allowed them to deny claims for large-scale, coordinated attacks. Sound familiar? It should. This is not a bug. This is the design. The system is structured to protect the powerful, leaving the vulnerable to fend for themselves. Today, the same pattern applies. Meanwhile, businesses believed their policies were comprehensive, only discovering the truth after a catastrophic event. The cost of recovery, data restoration, and reputation damage fell squarely on their shoulders, uninsured. Let me show you the first piece of evidence. Cybersecurity Ventures reports that global cybercrime costs are projected to reach $10.5 trillion annually by 2025. This isn't just a number, it's a massive wealth transfer. This staggering figure represents not just direct losses, but the hidden costs of business interruption, regulatory fines, and legal fees. Most of this burden is now falling outside the scope of traditional cyber insurance policies. The trick is simple. Insurers are now implementing exclusions explicitly stating that traditional property and casualty policies do not cover cyber-related losses. This leaves a gaping hole in coverage. They also introduced arguing that state-sponsored cyber attacks, which are increasingly common, fall under acts of war. This allows them to deny claims, even for massive disruptions. It's a legal maneuver. This isn't theory, this is policy. While the insurance industry profits from premiums, businesses are left to face the full financial brunt of sophisticated attacks, often without recourse. The mechanism is clear. The contrast is stark. Powerful insurers craft policies to minimize their payouts, while ordinary businesses face existential threats. You're paying for a promise that often can't be delivered. But here's the critical part. The definition of is constantly debated, creating ambiguity that benefits insurers. This legal uncertainty leaves businesses in a precarious position, unable to plan effectively. The result? A growing number of companies are finding themselves or facing premiums so high they're unsustainable. This isn't just a cost, it's a barrier to doing business in the digital age. The World Economic Forum's Global Risk Report consistently ranks cyber insecurity as a top global threat. Yet the market designed to mitigate this risk is actively shrinking its capacity to do so. This is a paradox. This time is different, they say, but the pattern says otherwise. Every empire, every system thinks it's the exception. None were. The same vulnerabilities that led to past collapses are present today. What makes this dangerous today is the sheer scale and sophistication of modern attacks. Right now, ransomware gangs are targeting critical infrastructure, hospitals, and supply chains, causing real-world chaos. The average cost of a data breach has reached $4.45 million, according to IBM. This figure doesn't even include the long-term reputational damage or the potential for crippling regulatory fines. Your data is part of this equation. And here's what should concern you. As businesses struggle to secure coverage, they become easier targets. This creates a domino effect, where one uninsured breach can trigger a cascade of failures, impacting everyone. The cost of not knowing this is immense. While you're not paying attention, the hidden mechanisms of the cyber insurance market are quietly transferring massive liabilities from corporations directly onto you, the consumer. The third piece of evidence comes from the World Economic Forum, highlighting cybercrime as a top global risk, with the potential to cause systemic economic disruption. All sources are linked in the description. The same tricks and patterns that caused financial collapses in the past are now at play in the digital realm. The illusion of safety is crumbling, and the consequences are becoming impossible to ignore. So what should you take from this? First, understand that cyber insurance is not a complete shield. It's a complex tool with significant limitations, and you need to know what those are for your own protection. Second, recognize that your personal data is a valuable asset, and its security is ultimately your responsibility. Don't rely solely on companies to protect it. Take proactive steps to secure your digital footprint. Third, demand transparency. Businesses must push for clearer policies, and regulators must step in to ensure adequate coverage. Knowledge is the only protection against these invisible threats. This isn't prophecy. This is mathematics. The escalating costs, the shrinking coverage, the growing liabilities, it all points to an inevitable reckoning. The system cannot sustain itself in its current form. The illusion of security isn't just a flaw, it's the very design that allows the powerful to shift risk onto the unsuspecting. Once you see it, you can't unsee it, and that changes everything. If this opened your eyes, if you finally understand the hidden dangers lurking in the digital economy, then you're starting to see the bigger picture. Subscribe, because the next video will expose the truth about digital currencies. Will your digital assets be next to collapse? Understanding this changes everything. Now you know where to look. The truth is always there if you dare to find it, unmasking the hidden financial fault lines that threaten your future. Channel name has the answers. I'll show you where to look. Stay vigilant, stay informed, and protect what's yours.